Good morning, everybody, and happy Wednesday. I don't know where the week is going. It's flying by so quickly. And we got a big day today, so let's get started here in just a second. There we go. All right. Very good. Again, good morning, everybody. Wednesday, November the 20th. I was just looking at the calendar, and I mean, I just can't believe that it's Thanksgiving in like more or less a week. And then, as I mentioned yesterday to some people, this year Thanksgiving is actually late. It's like a week late. So basically, next week after Thanksgiving, we're rolling right into the month of December. So the last trading day for the month of November, or the last actually half trading day, is going to be next week, Friday. So we're going to be rolling into December here real quick. So what are we going to talk about today? Again, good morning. If this is your first time here, this is our Set the Market Morning Show. Serge here from The Steady Trader. What we do is we go through our couple of top most important things that we're looking at. So let's get to it. 10 to 15 minutes. Let's go. Number one, I want to quickly talk about NVIDIA. We do have to talk about NVIDIA this morning. I'll show you how it's setting up on the market rover. It's still bullish from a trending perspective, although, of course, it's a big day today, so that can change. Number two, we're going to look at Target, down 17% pre-market today. There may be a trade setting up. And point number three, we have to talk about gold. We'll talk about gold. We'll talk about gold miners, Nuance mining, and I'm actually look at Pfizer as well, which kind of oddly somehow fits into it. So where to start? Well, let's start off with what's called NVIDIA. For those of you guys that are using the market rover and your inner circle members, you know that it's just been a beautiful, beautiful phase transition as a stock that has gone from, let's say most recently in the summer of 22, from a bearish trend to a neutral trend, and then became a bullish trend at about $23. This is, of course, before or after the split, these numbers. It's now currently trading, or was at last night's close, around $147. So I would say Market Rover, well done for nailing that. If you guys are not using the Market Rover, God help you. No, I'm kidding. No, really seriously, use the Market Rover. You can get in touch with our team to know how to do that. But the point more now is the question is what? Look, what I will say is this is clearly a good company. I think it's going to continue to be a good company, but there will be hiccups along the way. And at some point, the stock is going to correct, 50, 60%, then it'll go back up again. I'm not sure most people can stomach a 50, 60% drop at some point. It'll happen, right? Maybe next year, maybe sooner. I don't know. It corrected 30%, I think at least once this year. So, that's really well in the cards. And that was more of a blip than anything else. So 50, 60%, well within the possibility. Most people are going to blow up their accounts if that happens because they're all way overly allocated in NVIDIA. However, what is important to note as we go into this earnings report is the following. So if you look at semiconductors, more broadly speaking, so we'll look at the SMH ETF. The SMH ETF, and this is well documented why, so far still is trading at lower highs versus its July 10th highs. So that's number one. Number two, there's plenty of warning signs. Number one, ASML, which is, I think, the only high quality for the complex chips maker of machines that create things that NVIDIA need to make, right? And so those guys I've already warned. Then you have the second or third largest client of NVIDIA, which is SMCI, Super Microcomputer. Let me show you that chart. That thing is down like 60, 70%. Oh, SMCI is this chart. It's bounced now over the past few days, but it's straight down, and so there's potential delisting. They got a new auditor the other day, so the stock is straight up. We live in the gambling bubble, so that's what happens. But again, there's plenty of warning signs, so people shouldn't be surprised if, and I do not know, I have no clue, but if NVIDIA were to say something like, oh, orders are a bit slower going forward, blah, blah, blah. Like if they were to say that, I do not know. But if the warning signs would have been there, okay, I have no position in NVIDIA from a trading perspective. I'm long it, I'm sure, in my long-term accounts, just with a diversified portfolio. I currently have no trading positions, but I will look to do something after the report. We can talk about that tomorrow, Thursday. That's number one. Number two, let's talk about Target. So yesterday, Walmart closed at a fresh all-time high, up 3% in a straight shot. I think the stock's getting overbought. What's interesting is that Target this morning is down 17%. So the stock this morning is set to open, if it were to open right now, around $129. That's down 16-17%. That's a difficult situation to be in. So let me just show you the Target chart in isolation. So just to give you some perspective, the stock is set to open this morning about here, 129. That's is this Target? Yeah. So let's call it 129, maybe even a bit better. So that's about here. Okay. So that is roughly about where it found support in August. I would imagine that a stock that drops to this magnitude after really offering news that wasn't very good, if you go through the reports, you'll see it's basically, higher inventory, lower sales, blah, 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 all that kind of stuff. I would suspect this is going to be a situation where we could put on an options bear call spread. And when I say it's something that I'm looking at with my colleague JB. We're looking at potentially doing this for our credit spread authority service, where we would sell, an out of the money call spread up here, which would be then more making the bet that not that the stock is going to continue to collapse from this morning's open, but that it won't rebound and go straight back up, right? More that it's going to just consolidate a little bit for a few days, maybe 1 or 2 weeks. So that's number two. And again, any questions, as always, please let me know. The third thing is gold. And, gold, we've been mostly long gold. It's still my largest position, although I'm starting to get a bit more concerned about gold in terms of the way it acts. I'll show you gold futures here this morning, where we've bounced sharply over the past couple of days, but we actually removed gold miners from some of our trade alert products just because they got too volatile and I didn't feel comfortable. Same thing with silver. Gold obviously is less volatile, but it has to prove itself now whether this will ultimately become a lower high. And at the absolute latest, if gold were to break basically below the recent lows, that would be something for me to then literally scale out of my gold position for the first time in about a year and a half. I've been max long gold since, actually not a year and a half, a year and a quarter, I think since August or something last year. So I haven't sold any, but I'm open-minded now to potentially do that. We actually are adding gold back this morning to some of our more tactical positionings from an investment perspective, but I'm only doing that with the hope that the trend continues, but I'll be very clear and get out if that doesn't. The dollar headwinds continue to be there, so the dollar index, is strong. We will see. I don't know. I have a really hard time reading the dollar right now. We had the Trump rally, of course, and that made sense to me logically why that dollar would rally in the back of that, particularly with weaker European data and Japan and so on and so forth. But it really depends. If the dollar continues to rally, then I think gold's going to start having a more difficult time. Silver already, again, talked about it. We actually removed it from our positioning. But long term, I should say gold, and I say long term like through sort of a 1 to 2 year lens, I think gold's going to continue to do really, really well. So just to give you a bit of an idea here on the chart. So this is more like sort of, maybe a 1 to 2 quarter type of move. If gold, gets to the point now where it's just going to start to struggle, I'd rather not be in a maximum long position. To give you an idea, though, and this is kind of to look at all sides, if you look at gold, and I made an interesting chart here. I don't know if you guys want this chart. Do you guys want me to share this chart in here? I'm happy to take a screenshot and drop it into the chat box. It's a cool chart to have. If you want it, if you want me to do that, let me know, and I'll do it quickly here. Just type in yes or type in put chart into the chat box. But I'll show it to you here just before I do that. This is the year-to-date performance of. I added gold, S&P, and gold miners. And then I added the blue line, which is Pfizer, which has nothing to do with it, but I want to touch on Pfizer too. So you can see that gold is actually still year-to-date outperforming the S&P. And of course, the S&P essentially hinges on NVIDIA the next few days. Gold miners obviously are more volatile, and because they are more volatile, they are also lagging a little bit here, and they had a larger drawdown over the past couple of weeks than gold itself, which makes sense. But I just want to give this for perspective. So gold's still doing very well. It's just getting a little bit more volatile. The strong dollar to me is a bit more concerning. The long-term tailwinds have not changed for gold. And again, it's holding up really well versus equities. And I think next year, if equities start to no longer go straight up and to the right and become more volatile, notice I'm not calling for crashes, although that's always possible. That's not my base case. I think then gold will probably continue to look relatively good. Lastly, I want to talk about Pfizer. Pfizer is the blue line here on the screen. So Pfizer is down over year to date about 7.5%. And the reason I'm mentioning Pfizer is because it's actually currently yielding about 6.5% or something like that. So 6.5% is the current yield on Pfizer. Let me try to show this to you so you can see that here. So the stock's obviously down because we've had all this news around potential, tougher stands on healthcare coming from the upcoming Trump administration. But this is the dividend yield with Pfizer, which is now 6.7%, actually closer to 7%. And I think that's really interesting. So, if anyone's looking for yield, is Pfizer going to go out of business? No. Can the administration be tougher on healthcare? Absolutely. But from a yield perspective, this is not such a bad thing to look at. So there you have it. Top 3 things. NVIDIA. Hopefully that helps for perspective. Again, the market rover still has NVIDIA and has had NVIDIA. Bullish trend. That's the green background color since $23. Is now at $147. Of course, split adjusted. So thank you, market rover. Again, no reason to be short, but understand that the earnings report this afternoon is going to be important. So I personally have no trading position in it. That's number 1. Number 2, we talked about Target. Target this morning down 17% pre-market. It may offer up a trade where we see limited upside for sort of the next couple of weeks if the stock opens and kind of stays down in that sort of let me make this a daily chart in sort of that 129 area. And then thirdly, of course, gold and gold miners, and we talked about the performance there. But again, I think for gold and gold miners, and particularly gold miners I'm already no longer long because of the volatility concerns. But I think gold, and just for the GLD, very simply, if we break below, the lows from last week, I personally will start to reduce some long positions. Until then, I'm still maximum long gold for now. So. That's it here, top 3 things. Hope it was helpful. Please subscribe to the channel. It allows you to be updated in real time when we do these live sessions. We're going to do a lot more of these live sessions outside of Set the Market. We've got a whole bunch of things planned. They'll be kind of impromptu. Also, any other research and podcast interviews will be updated in real time. So please subscribe, hit a thumbs up, like, and that way we also are able to continue to do our morning show. See you guys back here Thursday morning. Good luck today, and we'll see you tomorrow.